today with Peter Bains, Group CEO of Biocon. Peter, thank you so much for speaking with us at NDTV Profit. And we had a conversation earlier with Biocon as well, but we were keen to get the overall picture from you. So thank you for making the time. Let me start with just understanding the numbers that we've seen this quarter. And we've seen a hit in the profits because of depreciation, because of interest payments, and an impact on APIs. But can you break that down? Why do you think we've seen a profit hit of 46%, and what are the components there?
Sure. So let's take them one at a time. I mean, the API's business has seen price pressures, and I think that's a sector-wide phenomena. So, we've been able to absorb those price pressures by showing significant growth in our formulations business. And if you look at it on the quarter, sure, that's the picture. If you look at it on the year, you'll see, some growth coming out of the generics business, and that's being pushed by the formulations business, which grew at 36% and has more than offset this is on the revenue side, what we've seen on APIs. But yes, a little bit of margin compression there. If we then go below the line, when you look at depreciation, this is of course just the accounting treatment of prior investments, and we've been investing right across the businesses in building capacities to support existing growth expansion and future growth that we're now, getting much closer to. And that's both in the generics business, where we've invested substantially in capacities and capabilities behind GLPs, which are very, very exciting class of molecules where, we recently got the first approval in a developed market for our lead molecule there, liraglutide. So that's why you're seeing, that depreciation come in. And as we bring these facilities online, same in the biosimilars business, where we've been investing in expanding capacities, particularly behind our very differentiated insulins business, where we see significant opportunities unfolding in the near term, and we're now well positioned to take advantage of those. So if you break it down, these are, some of it's market, some of it is simply the consequence of investments we've been making recently, and we're looking to see those investments pay off in the growth prospects ahead now.
Sure, and I think that's something the street has recognized as well. Let me come to some of those aspects you mentioned one by one, Peter, and I will start with the API pain. Now, that is something that is being seen across the sector. It's not a story of only Biocon. But I want to get your sense of how long do you think these, this headwind will sort of last?
So it's an interesting question. I mean, our view is it's certainly going to, spill over into FY25. We are anticipating continued pricing pressures on APIs. Our strategy here has been to invest behind an evolution towards formulations. We had a high number of formulation submissions last year, and a good number of those have already converted into approvals, and there are more going in. We expect more to come out in terms of approvals to fuel the compensatory growth. The balance of the business is going to shift. It's already shifting. It shifted this year, where we've seen the share of the formulations business grow to 35%, against the 65% on API. We expect that to shift over the coming years, and actually we'll see formulations becoming the larger part of the generics business in the near term. And then on top of that, we'll layer in, what we're looking at on the GLP side. So, there will be an impact. We do expect it next year. We do expect, as we did this year, to more than compensate for that through the formulations business, and then we'll layer on top the GLP opportunity.
Okay, I'm going to come to GLP in a bit because obviously that's the big talking point and everyone's very excited about it. But just a little more on the margins. So the margins have been aided this time round, Peter, by a reduction in R&D costs. Do you see that persisting? What is the outlook in R&D?
So R&D is not in itself a linear cost. I mean, it does go up and down depending on where you are in your pipeline and what stage of development they are. So what we're looking at is a calibration down in R&D, but the R&D spend, if you exclude Syngene, is still going to be sort of in the 8 to 9% range. But we're not backing off from two things. We're not backing off in the biologics business from maintaining our position with a world-leading pipeline, and we're not backing off in the generics business from ensuring that we have a stream of formulations and that we back our position in GLPs. So we will continue to spend what we think is appropriate to ensure that our pipeline remains globally competitive on both sides. But we will see a calibration down in FY25 as a consequence of moving some of the higher cost elements of R&D out now and bringing the less costly ones in.
Okay. Let's come to the GLP-1 bit of it. Obviously the weight loss drug phenomena has gripped the world's imagination. You've had a headway there with Brazil. Can you give us a sense of whether that is on track? When do you expect, say, US approvals? Is there an India plan there? And when does this start reflecting on the top line?
Sure. So let me sort of address that in two or three components. Strategically, the company, made a decision 5 years ago to start investing behind GLPs, and as you've described, the GLP opportunity has grown, beyond what we imagined then. Although even then we figured it was going to be pretty big. And our investment is very strategic. So while we're leading with liraglutide and we have, the first approval in a developed market in the UK, and we are certainly looking at expanding our regulatory efforts in submissions and hopefully approvals with liraglutide. Behind that, we have semaglutide and tirzepatide, and beyond those, we have an undisclosed pipeline of additional GLPs and GIPs. So we've invested strategically behind this opportunity, and of course, the opportunity is now, globally recognized as strategically very, very big. Analysts estimate that by the end of this decade, innovator sales in GLPs will exceed 100 billion. And of course, we coming in behind that with our generic products, we'll be looking to be a leader in that field and to take a strong position. I also say that the approval in the UK is not just about accessing the UK market. It's very clearly a strong signal of our enterprise capability in developing what are complex GLP drug device products. And I think this augurs very well for our ability to feed into that growing opportunity going forward. You asked about when will we see this? The line of sight to the UK can be before the end of this fiscal to start, but that will be very early, but we'll see the more material impact in fiscal 26. And the UK is the front end of a series of submissions and approvals that we're hoping to get.
So you talked about how Biocon was at the forefront of this. You started 5 years ago, but right now, everyone is in this space. So I'm trying to understand that by the time you get on, will there be too many players? What does that do to pricing? Will Biocon be in a position to be ahead of the pack?
Yeah. So it's a very good question. and quite clearly it's going to be competitive. We recognize that. But what we're looking to do is to be a first mover and have advantage there, and maintain that first mover position through the sequence of GLPs, as they become available and lose their exclusivity. We also believe that we have strengths in our vertically integrated model. We have expertise in devices, which are also a part of this field. So complex drug device combinations, we have expertise and experience and track record there. We think that helps differentiate us. And our global reach now is extensive in spanning obviously the United States and Europe, but Latin America, you've seen us move in GLPs in Latin America, but our footprint goes right across the globe. We're globally ambitious here.
Okay, just one last question, Peter, and then of course I'll let you go, is about what's the next big thing in the pipeline and the next big milestone for Biocon? Is it, a US clearance for the Vizag immunosuppressant facility, or any delays in pipelines clearing up? What's the next big milestone you've set?
Right. Well, I think we've spoken about the really big opportunities on the generic side, with the formulations leading the charge in fiscal 25, and then looking forward to fiscal 26 with the start of what we can see can be a very durable opportunity in GLPs. On the biosimilars side, we have now on the horizon clear emergence of a new wave of product introductions, new products. Now, they still have regulatory processes and challenges to overcome. So clearly, Aspart and bevacizumab, we're anxious to get those to market. We've been working with the FDA, the agency there. There are no further outstanding scientific questions. We've submitted all the documentation that's required, and we're simply now, waiting for the inspections to occur. Now, of course, subject to the outcome of those inspections, that can pave the way for product launches, maybe even at the end of this fiscal, but certainly, early in the next fiscal. You've also seen that we announced that we've, achieved a settlement with the originators for ustekinumab for a launch in January next year. That's this fiscal January calendar 25. That again is subject to approvals. The file has gone in and been accepted by the FDA, but there'll be a product approval inspection at the site here in Bengaluru. And subject to that outcome, we could be looking at moving on that in the last quarter of this fiscal. That's a very significant opportunity. That's an $11 billion opportunity on a global innovator basis, and a $7 billion opportunity in the United States. We also settled for aflibercept in Canada, and we have an approval there, so we have a line of sight to launch there in the middle of calendar 25, and that's a $600 million opportunity in Canada alone. And of course, we're looking to settle more widely, and that's a $5 billion opportunity. So, the next big thing in the biologics is the emergence of this new wave of products that is getting, very close now on the horizon. So we think that's very exciting, and that can build upon the very strong market traction that we've seen in the last couple of quarters since completing the transition in the United States. It completed it 1 quarter ago in Europe and saw good traction. And of course, it's been the best quarter in the rest of the world markets, which really signals that our commercial engine now coming out of the transition is firing and is effective. And we're looking forward to fueling that with these new product launches soon.
Okay, so sounds exciting. Thank you so much, Peter, for speaking with us today and giving us a sense of what's next for Biocon.
My pleasure. Thank you very much.